Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk copper futures here. Copper down over 2.5% today, hitting down 2.75% on the day's lows and finishing well over 2.5% lower. We had a 14% run up in copper from December of last year until the highs at about 333 on the futures contract. And we've had a 6% fall since then, including the 2.5% that we got today. So copper is still in an uptrend, but it is clearly correcting as it comes off of that over $3.33 high that it made. Main cause of today's sell-off, which was the largest sell-off for the year and finished towards its lows, close enough to say finished on its lows, was the release of Chinese data that their December production, their smelting operations, had come in at about 865,000 tons of smelted copper. That puts them at 8.9 million smelted tons of copper for calendar year 2017, which is a record for China. Now, the global growth story will have to absorb all that excess supply, and the fact that copper is a market that, in its very nature, concerns itself with supply disruptions. There's mines in Chile, for example, that suffered through strikes in 2016 that are going to be renegotiating labor contracts again in 2018. So the sell-off may be short-lived, but it's pretty dramatic and the chart looks pretty bad right around now. Another part of it is the dollar is stable. The dollar is no longer falling, so that's not supporting copper. A weaker dollar makes copper more affordable for foreign currencies and foreign countries, so they tend to buy it up and push the price. But the dollar is really stable, although it is stable at the low end of its very recent range. Dollar index has been on a bit of a sell-off. It's been sideways the last 5 or 6 days. Did not break out to the downside, but certainly did not recover. So that's not adding any pressure nor any stability to the copper contract today. So again, idea that the market can absorb this production from China. China did shut down a couple of smelting operations in October, November to try and control pollution, but the higher prices caused the current smelting operations to up their run rates and put out as much copper as they could to sell it at these higher prices that developed since December of 2017. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.